What's going on, everybody? Welcome back to my YouTube channel. So for today's video, I'm just going to talk to you about what a typical week would look like for a consistent and profitable trader. Now, I'm just going to let you know a lot of traders out there are so bang on, hit and take profit, winning every single trade, but it really doesn't work like that. So let's get into this and roll the intro. So what does a trader expect? Well, for some reason, speaking to so many traders over the years, they just really expect that their equity curve or their balance curve is going to just push to the upside like some ridiculously strong uptrend, and they're not going to face any drawdown, any pullbacks, or any experiences of the market coming back and stopping them out. And that's how I like to see it, to be honest with you. And you see with this perception right here, this is one of the biggest reasons, in my opinion, why traders fail, because they come into this business thinking that it's a quick rich scheme, and if not a quick rich scheme, they think that they're going to be able to just press buy or sell, and if as long as they take the trade within line with the market, everything should work out and they should win those trades. But it's really not like that. How your trading will be in the markets is sometimes you're going to have a really strong push to the upside, other times you're going to have a pullback with your equity curve or your balance, and then for the majority of the time, this is how it's going to be. For 10, 15, 20 trades, you're just slowly going to be grinding up. One day you might have a really strong push, and the reason why that will have a positive impact on your account and your progress is because when you was going through these drawdowns here, guess what you did? You managed your risk and you made sure that you didn't over exceed, or you didn't put on lot sizes that you're not supposed to be trading. And by doing that, you don't trigger the emotions or psychological effects that really and truly destroy most traders, which is taking a trade they know they shouldn't be taking, because what they're trying to do when they experience a drawdown like this is get themselves back to this point. And eventually what happens is they take a trade that they know they shouldn't be taking, they get back to this point, but they don't get quite back here, and then guess what happens? They're not satisfied. So they take another trade, and then eventually they get back to where they started after that drawdown, and then guess what? They go again for the trade, and they push again, and they push again, and they almost get back to this point, but they don't. And because they can't get back to the original balance that they wanted to get to, they take another trade, and eventually, before you know it, this drawdown will just go down and down and down. And for some people, they never get back across this line, and eventually they plummet. Now, this is not how it's supposed to be for you. The only reason why you're going to be having these movements with your equity curve or your balance curve is because you're risking too much, or you're taking trades that you know you shouldn't be taking, and you're not following your plan. So what do I mean? Well, really and truly, guys, your growth should be, in theory, slow and steady. At times you will have some drawdown. It's just unavoidable. Maybe 2 or 3 losing trades in a row. But then you go again and you keep grinding. And one day you get into that trade and it just exponentially goes up. And then sometimes you're just going to have a little slow drawdown. And then guess what's going to happen? You're going to have another another climb back up slowly but surely. You may plateau a little bit where you can't, increase where you've been at, maybe because of psychological barriers or whatever it is. You might come back down, but you don't destroy what you've already built, and then you start to climb again, and before you know it, you have another rally, and then you continue the same process and another rally, and then you might stall for a bit, you might have a little bit of drawdown, and then another rally. But if your stuff is looking like this, and this is how you built it to this point, and then eventually it leads to this, then I'm telling you, you will not survive as a trader. Well, I did my very best to explain that to you, but what I wanted to do is take a look at Euro USD on the 15-minute time for entries for this week, and that will be the week starting the 7th all the way up until today, which is the 11th. We're just about to open New York now, so let's take a look at what's happening. So let's say this is your first trade of the week on the 7th. Here you can see, let's say we take this break and retest of this trade with an engulfing candle, we get stopped out. So now we're down 1R. What should we do in a situation like this? Well, it is not nice losing your first trade of the week, but guess what happens, guys? It happens. So we take a 1R loss on our first trade for this week. Now, what should you really be doing in theory if you want to be a consistent and profitable trader for the long run. I'm not talking for this moment in time, I'm talking for the long run. Well, you just need to keep trading, right? You need to wipe it off, or you need to let it go. Now, let's say we see another area in the market where prices finally create a level. This one shouldn't be here, really. That's for the next trade. But let's say we have a level where price was failing to break. And now we're still on, no, actually, we've moved on to Tuesday now, okay? So let's make sure we put this down so we can see it, and pop this in as a Monday. Monday will do. Thank you very much, sir. Okay, so this is Monday's trade. We're -1 down. Now let's move on to Tuesday. We see a nice break close below the structure. Don't watch the time, guys, just watch the patterns here for me. And we see a level in the market where prices creating a level and respecting the level, and we take this trade. So now Tuesday's come, we win this trade on Tuesday, and looking at the results of this, we are now +3. Okay, so minus the 1, we're now 2R up for the week. So we can continue to trade into Monday. So now Monday morning, and we see a really nice break close below the structure, a level created, the market respecting that level, and we take the trade, and guess what happens? We end up losing this trade. So the same day on Tuesday. Now, I'm not saying take the same trades or 2 trades on a Tuesday if you've won, but I just want to make a point here, okay? We lose another trade. Now look here, at the moment we've taken 3 trades, lost 2, won 1, but we're still in profit. Now it's very difficult to deal with this because you don't really want to lose, and we're not built to lose. But if we go back to our example, remember we said as a consistent profitable trader, this is how your equity curve should look. Just slowly grinding up, and then eventually, or hopefully down the line, as you continue to do things consistently and systematically, you get one of those bigger trades. So we move on now. We can see we're still in a downtrend. We have a really nice break close below the structure here, a level created in the market, lots of wick rejections, and we take this trade. Now look what's happened. Price pushed down, came all the way back, and by this moment, we would have had a break-even trade. So let's say this is now trade number 4. I wish I didn't put the days there because now it looks like I've taken 3 trades on a Tuesday. But anyway, the focus is on the actual process. So we take a break-even trade. So now we're 4 trades, 2 losses, 1 break-even and 1 win. Now we're still in profit, +1R, but it is really, really hard to suck up, okay? But we continue to trade. We see price breaking this structure, as you can see here. We have a nice retest, engulfing candle to the downside, and we take this trade, and look what's happened to this one. We get another break-even trade. But notice throughout the whole process here, what are we doing? Oh my goodness, guys, don't shoot me. We've taken another trade on Tuesday. I should have said trade 1, trade 2, trade 3, trade 4, but there's only so much planning you can do, right? So we take another break-even trade. So now we're 5 trades in, 2 break-even, 2 losses, and 1 win. By this time, those break-evens, if we put them in profit, will still be 1R up. And if you didn't, then commissions probably would have put us back to break-even. But let's call it 1R up. Now, think about the emotions that you're going through at this moment in time, right? You've taken this trade, and you can see here that your first trade created a downward movement in your equity curve. You take another trade, you get a nice push to the upside. You take another trade, you have a slight break even. You take another trade, you take another break even, and you take another trade, and yes, that would be it. So let's say this is your break even. Now, these are 5 trades, and it's really difficult, obviously, for a lot of traders to deal with this because by the end of the week, they have these plans to make 3%, 5%, 10%, 10 pips a day, all that rubbish. But to be honest with you, what did we say it needs to look like? Well, it needs to look something like this, right? We don't want to see big ebbs and flows like this because we know that's where we're going to find problems. But as long as we're respecting price and we're not really going into too much drawdown, we're not increasing our risk and our lots and jumping into trades that we shouldn't be taking, we're staying consistent with the patterns, then this is how it would look, okay? So let's continue trading. We're coming into now the next day, I believe Wednesday. As you can see here, no trades on a Wednesday. So this is another big factor, having to sit back and take no trades on Wednesday. Now we're into Thursday, and as you can see here, this has been a good 36 hours or so without no trades and still only 1R up after taking a loss, a win, a loss, and 2 break-evens. Imagine how tough this is, right? But then what happens? The 10th, coming into Thursday, we see price pushing to the upside here. We have a really nice break, a retest of this break of this structure, And what happens? We take the trade with an engulfing candle, buy, stop, however you want to do it. And now we hit a, so let's put this here, Wednesday, no trade. And then we come into Thursday, and what do we see here? Thursday will do. We have a +3. Now, it's easy to do this once price is played out, right? But the truth is, if this is how price plays out on a weekly basis and a daily basis, then this is something you should be doing every single day. So if Rox is showing you something like this and you'd be like, oh, Rox, you know, you've cherry picked. Well, no, not really. I didn't cherry pick. I've picked what could have been tradable opportunities. Being brutally honest here, we've taken 2 losses, 2 break evens, no trades on the Wednesday and only a trade on Tuesday and Thursday. 2 trades out of 5 days I've taken. Looking here on Friday, I don't see anything, to be honest with you. I wanted to force one here, but no, we can't. But look at this. So let's say this is my trading week. How many trades did we take? 1, 2, 3, 4, 5, 6 trades this week, and we've only won 2. But how do we finish the week? Well, we finished the week with 2 wins minus 2 losses, and we finished the week plus 4R. Now imagine if you're risking 1% per trade here, that's 4% profit. If you're risking 0.5%, then that's 2% profit. Now you telling me that you wouldn't be happy with 4% a week or 2% a week on a very bad week of 2 losses, 2 break evens, no trades and only 2 wins? I'm sure you would, but you will not get to a stage, you will not be able to get to a stage of trading like this unless you are super patient and you allow the trades in the market to play out and realize that not every trade should win. So if we take this information and we see here, we had a loss, we had a win, we had a, we had a loss. Okay, so we just need to change this slightly. So it's not as big as that win, but it is a loss. Then we had a break even, then we had a break even, then we had no trade, and then eventually we had a free win. Okay. Oh, goodness me. What am I doing? Right. And now look at our equity curve. Beautiful, right? Now, this one is a bit exaggerated. We could have put that down here a little bit. And let's just pop that in for our first little loss here. Then we had a really nice 3% winner. Slight drawdown, break even, no trades on Wednesday, and then we had another win. Now, if we take a look at what most traders' equity curve looks like, up, down, up, down, up, down, chasing trades, bigger lot sizes, you know, revenge trade and all of that lot, compared to what a consistent profitable trader's equity curve looks like, you can see the difference. And to highlight how it would look like here on the charts, you can see the difference. So think about this going into next week, guys. I know it's very frustrating getting break-even trades. It's horrible to get losing trades. But I'm just telling you, I really hope this helps you because I see this as a big problem with traders, something that really affected me a lot. And I hope that I can encourage you guys just to stay focused, continue trusting the process, be patient, be disciplined. You are going to take losses. We've taken 2. You are going to take break-even trades. I took 2. There are going to be days where there's no trades. It is what it is. But if you keep doing what you're doing, guess what? Your wins will come. And if you're using good risk management, you're patient and you're disciplined, then you could have finished your week 4% this week or even 2% this week. And as far as I'm concerned, that's absolutely huge. So I hope this was useful, guys. Please smash that like button. Subscribe if you haven't. Turn on notifications. Have a fantastic weekend. And I will catch you next week. Take care for now.